Welcome back. Here with the Trading Hour, and we've been talking about the rupee, which has now breached a fresh record low 91 against the greenback. And we have Navneet Damani, the head of commodity and currency research at Motilal Oswal Financial Services, joining in now. Navneet, thanks very much for being here. This 91 mark, a new psychological level. Do you see some consolidation here, or do you think this could trigger, some further momentum? And what are you immediately hearing from traders? Is there some panic buying from importers that's triggering this fall?
Well, 89 was a psychological level which was not surpassed for a very long time. But ever since that's breached, a panic selling has been set in, and we are seeing depreciation every alternate day in the rupee. Primarily, exporters have been very active in the market and have been covering to a very large extent in anticipation that probably there might be a peak around 91, 92 levels. In anticipation to that, trade deal has been a major laggard, which has been adding to the depreciation at this point in time. Until we hear a positive buzz from the government as far as trade deal is concerned, or probably some intervention, massive intervention from the RBI, then the slide is likely to continue. And technically speaking, it's headed towards 91.5, 92 levels before we take a break.
91.5 and 92, that would be fairly scary. I mean, 91 isn't any less scary either. Navneet, I just wanted one, clarity. How are the volumes right now? Is it falling more on lower volumes, or is it volume back? Because towards the end, the impact cost increases as well as volumes thin out across the world.
Well, I wouldn't say the volume is very consistent. It's been ad hoc on alternate days and alternate time frame. As and when we approach a new level, we see massive amount of volume coming in. But through the day, the volumes are not as robust as it was around 87, 88 levels.
Navneet, generally the depreciation in the rupee is coinciding with a strength in the dollar. In this case, that's not the case, right? Because the dollar is struggling. It's still, sub 99. It's almost at 98 now, the dollar index. So what other external factors, barring the trade deal, is contributing to this? And if you mentioned that 92 is where you take a break, does that spark an intervention from the RBI, which has so far remained absent?
Well, dollar and rupee has not been in sync ever since start of 2025. We saw dollar appreciating, or dollar index falling from 107 levels to 96 and then appreciating back towards 100. But pretty much around that level, the rupee was consolidating between 80 to 83 levels. They did not react to it. Ever since the dollar started to go flat and probably rebound from 100 to in the range of 98, we are seeing a depreciation in the rupee. Largely, the driving factor at this point in is the trade deal and the capital flight which we are seeing in the equity markets. To top it up, the Japanese bond yield has been rising. U.S. bond yields are upwards of 4%, and the differential between both the countries is something that is kind of having upper hand on the rupee at this point in time. Well, RBI will come to intervene or not is somebody's guess. They were pretty active in the market between 88 and 89, but ever since that, we've not seen a massive intervention from the RBI. And 92 is a level where I think we see that some bit of exuberance or some bit of depreciation might take a pause. We've done an analysis of the last 40 years where rupee tends to depreciate by, say, 12% on average in every 4-year bracket. And since 2023 to now, we are depreciating by about 9.5–10% as we speak. So another 1.5–2% is still on cards. It happens by end of the year or maybe start of 2026. We'll have to wait and watch.
Navneet, just very briefly, the RBI's $5 billion forex swap, immediately in the spot market, do you think that could have any very, very short-term trigger?
That is already in the price. That has been announced about a week or so ago, and that is already built in price. And the forex reserve is something that we have to wait and watch for, because they have not burnt much of forex reserves. We were around 702 at peak, and as of last week we were around 686. So this typically indicates that RBI actively is not intervening in the forex market at this point in time, because if that happens, then forex reserves go down very drastically and very rapidly. So we'll have to wait and watch. The Fed or the swap that you're talking about is already built in the price.
All right, we'll leave it at that, Navneet. Thanks very much for your time here. We have to take a short break, but don't go anywhere. A discussion on the hospitality sector when we return.